What if you could pick up 100 shares of PLTR stock for free? Yeah, you don't pay anything and you control 100 shares of PLTR stock. Well, if you follow the stock market and you're into options trading, you've probably heard of PLTR. PLTR is one of the hottest stocks in one of the hottest sectors, actually two of the hottest sectors. It's in AI, artificial intelligence, which you hear about all the time now. It's a huge growth market, and it's also in software as a service. So it's a software company. So huge margins, growth, revenue. Well, in this video, I'm going to show you how to control 100 shares of stock for free. We're going to quickly review PLTR, the company, and then we're going to jump into the strategy, and I'm going to show you exactly how to use the poor man's covered call strategy to control 100 shares of stock for free. Before we get started, please hit the like and subscribe buttons down below so we can get this video out to as many people as possible. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. If you're interested in getting more bang for your buck with options, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stock outright. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks, 5 for depositing just $100 and 10 more for depositing $1,000. You also get the free charting software that's great, and I use it every day. It's a zero commission online platform and brokerage. All right, guys, let's take a look at this article that just came out today from Johnny Rice of The Motley Fool. He talks about the top artificial AI stock to buy hand over fist right now, and it's Palantir. Actually, I didn't realize this, but it's derived from the Lord of the Rings. The company's name provides a clue as to what it does. It's a magical object that allows a user to see everything happening all at once. And that's basically what they do with their software. It's a software as a service product, and it gathers information and sells to the U.S. government and clients, enterprise clients. It's got government contracts, and those are essential to its success. And basically, when you have a government contract, it's very hard for them to stop using you. It takes a long time to actually gain those contracts, but once you do, that's revenue for several years. And right here they say, because the government is resistant to change. Getting it to work is hard, it can take years, and it's not a cheap process. Well, they're already there, which is great. It's a safe way to, let's see, it's safe to say that money drying up for counterterrorism efforts isn't happening anytime soon. Definitely. We see what's going on with the geopolitical issues in Taiwan and China and Ukraine and Russia and, the terrorism that's happening. They're in a great business. And it's not just government contracts. Their commercial business is high as well. The company reported 40% year-over-year growth in U.S. commercial revenue for the first quarter of 2024, and they added 70% more clients, commercial clients, compared to the prior year period. So they are booming. Now, the PE ratio, it is 200, so it's very high. However, what you really we want to look at for a company like this is the forward growth PE of 75. And if you look here on Yahoo Finance, you can see trailing PE 210, forward PE 76. So that actually takes into account their growth expectation over the next year. So with that said, I think Palantir is a great stock. Let's look at, actually I have a trade on, you can see this is the Tastytrade account. I use Tastytrade as well as Moomoo. Use the links down below. And Palantir, you can see I've got right now a poor man's covered call on, and I'm going to show you how to do another one. But just to let you know, I've already got one on. This is 357 days, the 20 call. The stock price is 25.42 right now. And then I've sold against it the August 27 call. But and then what I do, so you buy the deep in the money call, that replicates the stock ownership. that controls 100 shares of stock. Each option contract controls 100 shares of stock. And then you sell a call against it and collect monthly income. That's the way this works. And the monthly income that you collect over time, over a year, should pay for the cost of the deep in the money call. So that gives you control of 100 shares of stock basically for free. So you can see here over the last 365 days, $859 that I made in Palantir, just on the options sold against it. But you can see I started on 8/31, so basically September. So we still got, today's the 28th of June, so we still got 2 months to go to make a full year, that's about 10 months, but 860 bucks. So, basically $1,000. So let's go ahead. Let's look here at the chart first. So if we look at the year chart, you can see it's trending up. Now, the green is the 13-day moving average, and the red is the 50-day moving average. So you can see it's trending up. The short term, the 13-day is trending above the 50-day, and you can see the whole stock the whole year is trending up. So I like that. Let's look at some of the fundamentals. This is the revenue, the income statement. So you can see revenue in blue, and every year it's just trending up, and net income as well. And then the balance sheet annually, you can see assets, liabilities, and the way that that's changing. The assets keep increasing. Liabilities are staying pretty consistent. Here's the ratios again. That we know the PE is high on this, 189. However, the profit margin is 81%, which is unbelievable. And I think Palantir is going to continue to do great. So let's jump in and show how to put on this poor man's covered call. So we go to the trade page. I'm going to go, when I buy my deep in the money call, I go out at least a year. I like to go out closer to 2 years, because the difference, let's look at the 20. The 20 call 1 year out, I've already got on. It's $8.80. So this is really $880, because one contract controls 100 shares of stock. So you basically take that $8.80 and multiply it times 100. So 885, it just ticked. The market's open right now. But if we look at the 20 call in another year out, basically, so instead of 357, if we go 567 days, which is great, we can do the 20 call for 1020. So once I get to a year, the time decay will start to kind of tick away. So I like to go out 2 years, and then at 1 year, maybe roll out to the second year if I'm still bullish on the stock. So you want to do this. The poor man's covered call is a bullish play. You want to pick a stock that's going to go up over time. So let's look at the January 16th and the 20 call. We're going to buy that for, we click on the ask on the call side, puts on the right, calls on the left, $10.20. And then we will also open up here the shorter term. I like to go about 30 to 45 days and then roll at 15 to 20 days. We're already at and use the regular option change. The W's are the weeklies. So actually I'm going to take those out and just do the regular options. So we've got the weeklies, or the regular options. We've got July, 21 days. That's a little too soon. I typically roll at 15 to 20. So I'm going to open up the August, and then you can see I've already got on my other poor man's coverage call the 27. So that allows you a little room to the upside on the call. So you gain money on the call that you bought. And then also we're going to sell this call against it. So look at the price is $10.20. I sell a call against it, and it comes down to $8.55. So you see we are buying the January 16th and selling the August 16th. So I've already got one tranche on, but hey, another 855 bucks. I believe in this. I'm just going to go ahead and hit review and send and place the order. It did not get filled. So what I'm going to do is go to my activities page, pull up the working order, replace it, and then it looks like I need to up the price a little. I'll go 857 just to get filled. Still not filling. Okay, let's move it up again. 58. I just do that until I get filled. I bet she's going to do it here. 59. No, we got to go up to 860. That's okay. Still, the difference between the mid price is 56.60, 4 cents, $4. I don't mind that. It's still very liquid. Now we got filled. All right, at 860. Hey, nice even number. So that is how you put on a poor man's covered call. All right, guys, that caps off today's video. Be sure and hit the like and subscribe button down below. Download the free options workshop. Join Moomoo. Leave a comment. Ask a question. Are you trading Palantir? What are you doing? Are you doing a poor man's covered call or something else? Ask a question. I answer every one. Thanks for watching. I'll see you in the next one.